Hello everyone and welcome back to the Modern Investing channel. Today we have a video around three huge cannabis businesses, Canopy Growth Corporation, Green Thumb Industries and Cresco Labs. We will do a deep dive and I will tell you what I like and dislike about each of them as an investment. If you get value out of this video, please leave it a like and subscribe to the channel for more content on cannabis stocks and investing in general. Without further ado, let's dive into today's video. Let's start by putting these three companies in perspective. They are number 4, 5 and 6 largest cannabis companies in the world by revenue, so they are mid to big caps in their industry. And to put them in the geographical perspective, Green Thumb and Cresco are US based, whereas Canopy Growth is Canadian. Not long ago, I've made another cannabis stock comparison video about Tilray, Curaleaf and Trulieve, so check it out in the link description if you are interested. Looking at the revenue growth in the three top graphs of Canopy Growth, Green Thumb and Cresco, we can see that they are increasing at a staggering pace, like many other companies in the cannabis sector. The fast growth is of course one of the most attractive things for investing in cannabis space. Although all three are very fast growers, perhaps Green Thumb and Cresco have an edge, with a consistent triple-digit growth in the last 3 years. Absolutely incredible. When looking at earnings in the bottom three graphs, we can see, however, that the situation is quite different. Canopy Growth and Cresco are losing money on the bottom line. And what is more alarming is that as the revenue increases over the years, so do the earning losses, indicating that the business model is far from mature and that for every dollar that comes in, it needs to be subsidized by more than $1 from the company side. That's not great to see. However, we must remember that all these companies are in their infancies. I'm sure that the earnings will do better as the management teams shift the focus from expansion to profitability in the years to come. Nevertheless, there are cannabis companies that today make money, and an example we have it here with Green Thumb Industries. It lost money in the past, but in the full year 2020 it managed to make the transition to profitability and it is now enjoying some cash flows. All this while still in full expansion mode and printing triple-digit revenue growth. Because of this, I will give the crown to Green Thumb in terms of management execution, and because of profitability, I would call it the safest of the three businesses. Alright, now that we have compared them in terms of revenue and earnings, let's dive into each company individually and try to understand their visions, strengths, and weaknesses. The first company we're gonna look at is Canopy Growth Corporation, a global Canadian cannabis company. They are huge in the Canadian recreational market, being the number 2 players after Tilray. The recent acquisition of Supreme gives it a 13.6% combined market share, which is not far away from becoming number 1. They are actually already number 1 in dry flowers, number 2 in beverages, number 2 in oral and sublingual, which is a quite interesting choice of words, number 3 in pre-rolls. So overall, they are pretty huge in the Canadian market. They cover all price brackets and type of products, from flowers to edibles, beverages, etc. The recent acquisition of Supreme allowed Canopy Growth to strengthen its portfolio, adding all the brands that I have circled in red, widening especially its premium offering, as well as having added some important low-cost cultivation facilities in Ontario. But the elephant in the room is the relationship with Constellation Brands, which is the largest beer import company in the US. Constellation Brands bought 38% stake of Canopy Growth Corporation, which gives the opportunity to enter the US beverage market in a massive way. This is a potential huge driver, and we shall see how that will evolve. Let's remember, however, that cannabis is still illegal at the federal level in the US, so Canopy Growth cannot sell THC beverages through Constellation Brands anytime soon. Canopy Growth is a global company that, as I mentioned earlier, is the number 2 in Canada. Furthermore, has the leading market share in the German medical market, and it has a presence in Australia too. In the US, it has a sort of halfway approach where it's waiting for federal legalization. This means that it doesn't have THC products, only hemp derived CBD products. This is a massive issue in my opinion, because this waiting will allow other companies like we will see Green Thumb and Cresco to establish themselves in the most attractive market in the world, the US. So the US strategy is to sell hemp-derived cannabinoid products for now through Constellation brands and third parties. It is missing an own dispensary network in the US and it is not selling THC products in the US either. As I just mentioned, I don't like this move. It will allow its competitors to have a first mover advantage and they will face even more competition when cannabis will be legalized at the federal level. Ironically, when they do assess their own key performance indicators, they identify their US business to be the only one not on track among a number of targets. In their defense, they do have high targets to become the number one or two in the US. But perhaps they are diluting their focus too much with their global expansion. If becoming number one or two in the US was important, and it is important, they should focus more or less only on that, in my opinion. As we have seen earlier, their financials are not great and they are burning money quarter after quarter. However, they claim that they have a path to profitability and they expect to become cash flow positive in fiscal year 2024. I would take these estimates with a grain of salt. Unexpected things might always happen within the next 3 years, which could force them to stop their cost saving program. Anyway, this is what they claim and what it is expected. The second company we will look at is Green Thumb Industries. Green Thumb is an interesting company because in many ways it goes under the radar. It is a big US cannabis company and although it's number 3, it doesn't do flashy billion-dollar mergers and acquisition. It doesn't make scandals, it focuses on doing what it does well without catching too much attention. It is a vertically integrated business that produces, distributes, and sells cannabis related products through its own dispensary network. Approximately two-thirds of Green Thumb sales go through its own dispensary network. The last third is wholesale and sales through non-owned dispensaries. It has a footprint across the US, where it is present in the most important markets on the West Coast, as well as the northeast of the country and Florida. And of course, it serves both the medical market and the recreational market. It owns 56 dispensaries across the country, but has 101 licenses, so the opportunity to expand rapidly. It has 6 consumer product brands distributed in 12 states, and its revenues are growing fast, just like many other players in the cannabis space. It offers products from edibles to flowers, etc. Its biggest products are by far flower and vape, and then edibles coming soon after. Once again, just like Canopy Growth, it has a hybrid own retail and third-party business model that allows flexibility in seeking the best opportunities. Its dispensary network is fairly nice, especially this cafeteria-looking design, although I do prefer the style of other companies like Trulieve and Curaleaf. In terms of financials, they are doing pretty well. Besides growing revenues dramatically year over year, they reached full year profitability in 2020. And if we look at the earnings in the last quarters, here in blue, we can see that it was profitable in 3 of the last 4 quarters. This is great to see, and it means that the management team is truly capable of making money out of the business. And this was achieved without compromising quick expansion and revenue growth. All this gives me a lot of confidence and make me think that it has a bright future ahead. Overall, I think of Green Thumb as the boring guy that doesn't make gossip and flashy headlines, but he keeps his head down and build and achieve results. This is an attractive mixture for me to invest. If I can bet on a quote unquote boring guy that grows at triple digits year over year and that reduces risks by making money on the bottom line, then I'm pretty happy about the boring investment. The third company on the list is Cresco Labs, another vertically integrated US cannabis company with a quite interesting business strategy. It has a footprint across the US, covering 60% of the US addressable market. It has presence in 10 states, which allows it to reach among the most populous states and cities in the country. Particularly, it has a special focus in Illinois and Pennsylvania. It holds a 215,000 feet cultivation capacity in Illinois with the possibility to expand that to a 630,000, which would make it the largest in Illinois, as well as 10 open dispensaries. Also, it holds a large cultivation facility in Pennsylvania with unlimited expansion potential and 3 open stores. Specifically, however, Cresco Labs has a special focus on the wholesale market, and it claims to have 100% penetration within these 2 states. Wholesale is the business of selling cannabis products in bulk and therefore not directly to a customer, but rather to a network of dispensaries and big players, which may or may not be proprietary of Cresco. And in this context, Cresco Labs is actually the largest wholesaler of branded cannabis product in the US. In fact, more than 50% of Cresco revenues come from wholesale, as shown here in dark blue, as compared to 0% of Trulieve, which instead relies 100% on its retail business. Green Thumb Industries and Curaleaf are somewhere in between, with 30% of revenues in wholesale sales. So Cresco Labs does own the full value chain from production to branding and product packaging, wholesale distribution, and through its own retail dispensary network. However, Cresco management team really sees long-term value in this middle area of the value chain, the consumer packaged goods and wholesale distribution. I find this pretty exciting from an investor perspective because although I would personally rather bet on the shop experience, direct to customer, dispensary focused type of business, this wholesale consumer packaged good focus that Cresco has does offer an edge as an alternative business model. The risk, though, is how can Cresco ensure that other cannabis companies would not offer a product that is a bit cheaper, a bit better, and cut them off of the market? Focusing on retail has the benefit of getting in the face of consumers, and that gives you a pricing power and the freedom to decide what to have in your shop. Focusing instead in this middle part of the value chain, like Cresco wants to do, is more risky in my opinion. There is, however, a way that a cannabis company can maintain an edge over here, and that is if it is able to produce a product that nobody else can. And that is, for example, if the cannabis cultivar that Cresco used was unique with its own special taste and flavors. Because in that scenario, it doesn't matter if somebody else come offering a product that is 10% cheaper. If you want to taste specifically that flavor, you would have to buy a Cresco product. It would be like a bit like if you want to drink Coca-Cola, you would accept to pay a premium for the actual Coca-Cola brand. And the good news here is that, as I will show you in a minute, Cresco is working on its proprietary cultivars. Cresco owns a variety of cannabis products of all sorts, which it classifies in 3 price brackets, as well as heal, wellness, and adult use products. As you can see, it wants to focus on the high-end recreational products, where Floracal and Reserve are the premium brands. Digging into the Reserve brand, they do claim that they have proprietary genetics, so it is a perfect example for something very difficult to copy for its competitors. I appreciate that there are a lot of hints in Cresco investor relations regarding the vision of developing a portfolio of own genetic products. Here it reads, our genetic team selects the best genetic available for production and breeding initiatives geared towards the creation of novel, quality, new genetic offerings. And then again, they mention genetic unique cultivars. Also here, they talk about their premium brands where they say use only their highest quality flowers from our top tier genetics. As I mentioned earlier, I'm not a super fan of the consumer packaged goods wholesale approach But if there is a way to success, I believe it is exactly what they are doing, creating a competitive advantage via special plant cultivars. We must also remember that besides wholesales, about half of Cresco revenues do come from a direct-to-consumer, store-centric type of business, where they manage up to 33 stores, have the rights to 47 more, and 20 production facilities. And that was achieved also thanks to the acquisition of Florida player Bluma Wellness and the Massachusetts player Cultivate. Sunnyside is a Cresco-owned retail dispensary chain. It looks very nice. It gives me a feeling of a premium supermarket or a beauty shop. One thing to be aware, however, is that when you look at the valuation of this company, you will find an extremely low price to sale ratio for the industry of under 5. However, this is wrongly calculated because here the share outstanding are only 220 millions. But if you look at the balance sheet, you will find that there are up to 400 million shares on a fully diluted basis, which is a more conservative and I believe better way to calculate the price to sale ratio of a company. And taking this into account, it would make the price to sale climb to approximately 9. So which of the three is the best investment? They are all bigger market cap companies when you compare them within the cannabis sector, where Canopy Growth is the biggest one with an over $9 billion market cap. The geographies where they do businesses distinguish them a lot, where Green Thumb and Cresco Labs focus exclusively on the US, whereas Canopy Growth focuses on Canada, has business in Europe, and kind of entered the US with hemp-derived products. It does not, however, as of today, have THC-based product in the market with the biggest potential, the US recreational market. If we look at insider ownership, we can see that a huge part of Canopy Growth is owned by insiders, 37.1%. This is great to see, and the vast majority of this number is due to Constellation Brands having a stake in the business. Only Green Thumb is profitable today. Well done, Green Thumb. Canopy Growth is the one doing best in terms of cash on the balance sheet, whereas Cresco Labs is doing the worst. The valuation change a lot between one company and the next, where Cresco Labs has far the cheapest valuation, Canopy Growth is the most expensive, and Green Thumb is somewhere in between. In summary, Canopy Growth is a Canadian and global cannabis company that is unprofitable as of today. It has a wait-and-see attitude that I don't like for the US market. It wants to wait for federal legalization before it goes all in with the THC products. Very bullish is the strong ties with Constellation Brands that gives the company full access to the US beverage market. However, not the THC market yet. To mention, there is also that it has the highest valuation of the three. Green Thumb is the vertically integrated US cannabis company. There is not much to say because the management team, instead of promoting flashy partnership and hyping the business, they are head down focused on the business itself. They are growing at triple digits and they are profitable. Big thumbs up for the management team here. Cresco Labs are also vertically integrated US cannabis company. They are unprofitable and they have the cheapest in terms of price to sales valuation. They claim that they are heavily focused on breeding programs for selecting unique cultivars, which I think is pretty bullish. Also, their business model is splitting more or less 50-50 between wholesale and retail, which I think it could be an interesting play in itself. Lastly, when looking at the stock price performance in the last year, we can see that Green Thumb and Cresco have been running, printing a plus 130% and plus 85% growth, whereas Cannabis Growth Corporation has been lagging behind, showing only a 13% growth. In conclusion, in my opinion, the crown goes to Green Thumb Industries. I love the focus on achieving results of the management team, the triple-digit growth, and the already profitability. They have already a foothold in 12 states, and I think they are set up for a very bright future. I also love the focus of Cresco Labs on the breeding programs. This is what could give them a competitive advantage against its competitors. However, I have not seen numbers and hard data about this yet. So if you are in possession of this information, please feel free to share it in the comment section. Canopy Growth is a strong Canadian play and international play. So if you value those markets, take a closer look at it. You may also like the fact that they have a lot of cash on the balance sheet. I do not own any of these stocks as of publishing this video, but I will put Green Thumb and maybe Cresco on my watch list. What do you think about these three companies? Please share your thoughts and inputs in the comment section, and have a great day. Before we go, I must remind you that I'm not a financial advisor and this content is not financial advice. It's just my view and is meant for entertainment only. Please do your own due diligence before investing in any instrument. Have a great day.